Let's talk about a real head-scratcher on the market. A company that, on one hand, is valued at over $10 billion, but on the other, is losing millions. Today, we're diving into the strange world of BitMine Immersion Technologies, or BMNR, and trust me, it's a fascinating paradox.
So first, let's just get a sense of scale here. The market is valuing this company at roughly $10.7 billion. That is a huge number. We're talking about a serious heavyweight, at least on paper.
But this is where it gets weird. This number? That's the company's operating loss from the last 9 months. Yep, you heard me correctly. A loss of almost $1.8 million. And that, of course, brings up a very, very big question.
How is that even possible? I mean, really, how does a company that's in the red operationally get a valuation that's in the stratosphere? Well, that is the $10 billion puzzle we are going to solve right now.
Okay, to figure this out, you have to understand that BitMine is kind of living a double life. It has two completely different identities. Is it a crypto miner, or is it basically just a crypto treasury?
And this slide right here really gets to the heart of the whole thing. The story they tell everyone is about being this cutting-edge crypto miner with fancy tech, but the financial reality, what the numbers say they actually do, paints a very different picture. It's a speculative machine built to do one thing: buy and hoard Ethereum.
So let's start with that public story, right? Officially, BMNR is an industrial-scale crypto miner. They talk a big game about their special edge, this advanced immersion cooling technology. But then you look at the actual numbers from that mining business and, well, they're pretty underwhelming, to say the least. For a company supposedly worth over $10 billion, revenues under $5 million, and an operating loss, that's basically a rounding error. There is no way this tiny mining operation is supporting that massive price tag, not even close.
This quote from the source analysis just hits the nail on the head. The business itself looks more like a struggling startup than a $10 billion giant. So if the value isn't coming from the mining, where on earth is it coming from?
And that brings us to the real secret sauce behind BitMine's valuation. It's a strategy we could call the Great Dilution Machine.
And here it is. This is the whole game. BitMine's real job isn't making crypto, it's buying crypto. Just think of it like this. It's a machine that prints its own stock, sells that stock to investors, and then uses all that cash to load up on a massive pile of Ethereum.
What's so wild is how this thing feeds itself. It's a cycle. First, general excitement about crypto pushes the stock price up. Then, BMNR takes advantage of that high price and sells a bunch of new shares for cash. They immediately use that cash to buy more Ethereum, and then, this is the kicker. They announce their huge ETH purchase, which gets investors even more excited, and the stock goes up again, and the loop starts all over.
But, you know, there's no free lunch. This strategy has a major consequence for anyone who actually owns the stock: dilution, and lots of it. To pay for all this Ethereum, the number of shares has just exploded. Every time they do this, your slice of the company pie gets smaller and smaller and smaller.
And the valuation that this whole cycle has created is just mind-boggling. The company is trading at nearly 2,000 times its annual sales. A price-to-sales ratio that high is something you almost never see in any market ever. And hey, don't just take my word for it. Look at its so-called peers. These are actual crypto mining companies, right? Marathon, Riot. They trade at a price-to-sales ratio of, somewhere between 6 and 14. BMNR is at almost 2,000. It's not just in a different league, it's playing a completely different sport. This proves it. The market is not valuing this company as a miner.
Okay, so now that we see how the machine works, let's look at the debate this has created. What's the bull case for owning this stock, and what's the bear case for running away from it?
All right, so if you're a bull, here's probably what you're thinking. First, it's a super simple, high-octane way to bet on the future of Ethereum. Second, you love the story about its green tech. And third, hey, they've proven they can raise a ton of money and even got big names like ARK Investabyte, which feels like a stamp of approval.
The bear case, on the other hand, is brutally simple.
First, you're paying an absolutely insane premium for what's basically just a wrapper for Ethereum. You could just go buy ETH yourself for way cheaper. And second, that non-stop dilution means there's a constant, powerful force pushing down the value of your shares.
But there's one more piece to this puzzle that might just be the biggest tell of all. What are the insiders doing? The people who run the company, the ones who know everything. Are they buying or selling their own stock?
Well, here's your answer. Over the last year, insiders have sold, on net, more than 775,000 shares of their own company. They are not buying the story, they are cashing out.
And we're not talking about small moves here. The chairman and CEO himself sold 250,000 shares. But even more damning, a major institutional owner, a so-called 10% owner, sold its entire position, nearly 1.5 million shares. When the people in the know sell everything they own, that is a massive vote of no confidence.
So, after all that, where does it leave us? Let's get to the final verdict from this analysis and talk about the biggest risks on the horizon.
So let's just break it all down one last time. This company isn't really a miner. It's an Ethereum fund that pays for itself by diluting its shareholders. The valuation is completely unhinged from reality. The bull case is based on a story, a narrative. The bear case is based on cold, hard facts, valuation, and what the insiders are doing. And all of that leads to one pretty scary conclusion. The risk of a massive, catastrophic price collapse here is very, very high.
But beyond the crazy valuation and the dilution, there's one more thing, a dark cloud on the horizon that doesn't just threaten the stock price, but the company's entire reason to exist, an existential threat.
And that brings us to the final, multi-billion-dollar question. The whole appeal of BMNR is that it's an easy way for stock market investors to get exposure to Ethereum. So, what happens to its absurdly high premium when anyone and everyone can just buy a cheap, simple, and regulated spot ETH ETF instead? That is the question that could bring this whole house of cards down.